points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on March 4th, 2022. And today we're going to talk about turning $2,000 into about $13,000 or $14,000. We're gonna go over it, but best of all, if you've been watching the channel, you've got to see it. So we have to talk about wheat, and I want to go over this play. We are gonna have a normal watch list, but we are gonna focus on commodities. And why I'm bringing this up, it is a very awesome play. It was only a couple of days ago. A lot of people say, how do you do it? Just come watch the channel. Literally, it's right here. We've been documenting it. That's the first part. But here is the good news. If you feel like you are late, you could call it late, FOMO, whatever you want, but we're going to start here with the first pretty picture, and this is why it is so important. The play has to do with everything that is going on. In this chart right here, this is the Bloomberg Commodity Spot Index, and as you can see here, this is a massive rally. It's actually the biggest rally since 1970, and here's the funny part about that. Again, go back to the thumbnail here. It says widest spread in 30 years. That was referring to wheat, not the whole commodity index. So this is accounting for corn, oil, wheat, everything that you could think of. And that's why here I got a couple of plays that I'm going to share, and we're going to go over it. But now this is why you need to start understanding this. We've even been talking, maybe even looking into some of the futures, because now once we pull that spot commodity price index out, you could see there is actually still a little bit more room to go, because this time this was between like 2001 and 2008, and I'm sure you've been hearing a lot of commodities like oil and everything else. People are saying higher than 08, 09, and this is kind of important, but not so much, because literally, this index is made up primarily of oil, and then if you compare our oil situation between 08 and even today, we do not import as much oil. So some people today are even talking about oil might be a little bit safer to a degree, but point I'm trying to say, there is a big commodity surge right now, one that you have not seen in about 30 or 40 years, and it's gonna open up the opportunities for some of these crazy plays. So I got the plays for you. We're gonna go over all of it. We're going to explain what happened, the company news and events, and I even have 3 more similar plays. I pretty much call them the third string plays that we're going to go over, so I hope you are ready. But drop your thumbs up on the video if you find it helpful, and big shout out if you've been holding it down, liking the videos, and then hopefully we see you on stream. We are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning. But as far as today, it was literally now the reversal of yesterday, which was a reversal of that day before. However, we did close above that 431 level on the S&P, and that is very important. But we did get a little bit of peace talks, and it kind of introduced that first time you saw that here today. There was talks about the peace convoy. It started again in the morning, but this time market wasn't too jumpy, and that's because oil hit 119 on Brent. It did come down because a lot of people are like, well, the Iran deal is going to go through, so people got excited, but all of the commodities were ripping. Again, wheat hit another limit up day, corn, almost every commodity you could think about was up, and then you got this first word, ceasefire. We heard that today. The Russians and Ukrainians agreed on a ceasefire for a human corridor, so pretty much allowing an area for people if they want to exit safely from the war and all of that. But with everything going on and hearing, anything of ceasefire, and if you do actually hear a real ceasefire, that will be a bullish indicator, but that gave us a little bit more hope in the morning. But for the most part, there was still more escalation. You were hearing about the cities and everything getting taken over, but now there was more escalation in commodities. I'll even tell you this with wheat. We were discussing this, and even for this play, so you could understand it a little bit, a lot of people are asking, well, can we play everything else? Can we go for core? Can we go for this? Pretty much just because wheat is going up doesn't mean we should buy strawberries or anything of that nature. What I'm trying to say here is that wheat is very important. You even have the White House. They're very focused on what is going on with oil and the price of oil. But now just imagine if one of the most basic food groups, again, wheat, flour, everything, and how just important it is for food, not only for America, but across the globe, it starts to get a lot more important. And that's what I even said today. To a degree, wheat is almost becoming political. But what I'm trying to say is, whether it's wheat, oil, or anything else, you are watching escalation in commodities, and that is the thing that is not good. As we're going through the market right now, we should have been worried about Powell and everything he said yesterday. Even today, this was actually a wild part. You actually saw the rate hike odds jump, and I got a little bit of a news event for you that you'll see, but literally liquidity is not looking too hot in the middle of this. But at the end of the day, the market won't care that much, because in a weird way, the bigger threat to growth is if commodity prices go through the roof. That is actually, it may even lead to the Fed being somewhat more accommodative. So we're going to see, again, it puts them in a difficult scenario. Powell, even today with Congress, he didn't really give anything new, but what you are watching with everything overseas and then what we are feeling with commodity prices and the pressure, that is the thing that is heating the markets up, and it's going to give us a lot of volatility as we move through here. But that was the main thing. We already went over the pretty pictures, and again, I'm jumping right back to it, baby. It is all about the commodities and the waves, and now this is important. You see the wheat play if we're going to go after a lot of them, but essentially right now we are in the positioning stage. Again, people are getting ready and worried about what would happen if everything keeps escalating or stays escalated. Essentially, the real problem is if the commodity environment, or this environment for the stock market, if it stays like this for the next 30 to 45 days, that is where we get a problem. Even Powell said today, a surge in any prices isn't good, but as long as it comes down, it's fine. If it stays up, that's where they're going to start having a problem. So like we explained today on stream, a lot of what you're seeing across the globe with commodities, whether it's a business or a trader, but especially big businesses, even governments, what they want to be doing right now, they're trying to position and make sure they could guarantee supply in the short term. That is why they're willing to pay a premium, because you'll pay 20-30% more for a bushel of wheat right now, because in a couple of months, if it ends up not playing out as worse or things get a little bit better, then you'll take that loss because you'll save a lot more money with everything else. But it's more of a danger to be caught without something, if anything. So that's what I'm saying about all of these waves right now, because we are going to get a lot of moves as people position, get updates, and we really see as the situation goes back and forth, you are going to watch wild swings in commodities and probably going to impact the market as well. But there was that tomorrow, and even just to kind of tie it in with everything like we're saying with the Fed and moving forward, Fed is going to be in less than 2 weeks now, but you are getting a jobs report tomorrow, and depending on how the market reacts, we're really going to see how important the Fed is in the data in response, or at least going 1v1 against any Russia-Ukraine headline. So that will be the key, but you are living through a very historical commodity moment. I'm trying to drive this through everybody's heads, but that is the opportunity, and at the same time, that is probably going to be the big fear. So keep your eyes out for that. But coming into the company news and events, the White House, they balked at a Russian oil ban. So today we heard a lot of stuff, and they were saying there was bipartisan support to ban Russia oil and Russian imports. Again, both right and left side in Congress, they're saying, yeah, we're going to ban it. We don't care about what the consequences will be. But the White House did say they are seeking to minimize the impact on consumers, and going about the oil, it just would not really do that. It would hurt consumers a lot. So they avoided that. We'll see if anything changes in the next few days. But again, keep your eyes out for oil. It did hit 119 on Brent. Absolutely wild. But there was that. And then there was another report here about Russia crypto. The volume is stalling across most major exchanges. They can still trade peer-to-peer there, but a lot of analysts are pointing to a pretty much, it's like an 80% decline in crypto volume since the peak. So a lot of people are saying that, well, Russia is using crypto to circumvent things. That's actually not the case. And a lot of people are saying it is more positioning by other investors as opposed to real Russia money buying power. So keep that in mind. And then even on the contrary, it's actually the Ukrainians where they're seeing crypto activity pick up, as the government even had like a little crypto thing, but there was a couple of scams with it, they were saying, and it was a lot of back and forth. But that was very interesting. Watch the crypto markets. And then this one, very interesting because we noticed it today, but in a different fashion. The funding stress indicator, it surged to the widest level since May 2020, and that is the 3-month LIBOR. It jumped 6.1, and essentially essentially, this is the interbank lending rate, how much the banks charge each other to maintain the fractional banking so that they can keep loaning out the money they don't have. But it gets pretty crazy, but this is a sign of liquidity. Essentially, bank to bank now, they are charging more money. And if you remember, we threw up the yield curve today and we noticed, we were like, why is the short end already rising as if they've already raised rates? Well, it was probably this right here. So if this keeps picking up, again, everything going on, whether it's energy, sanctions, Russia, Forex, currency, stocks closed, again, back to commodities, it is now starting to tie up a lot of money and the liquidity is drying up pretty fast. So this is probably going to be important as we get into next week and the next couple of weeks. So watch out for that. Then this one, thought this one was interesting. It came up as a top news thing, but ex-Fox News producer was charged with violating a Russia sanction, but it was from 2014. So he violated it in 2014, or one of the people who got sanctioned from the 2014 stuff. So it was a long time ago, but apparently they arrested him today. They're like, good timing. Let's make a point of it. But there was that, and then Iran. And for those of you who are interested in the Iran nuclear deal, and you probably should be, simply because it is going to affect the price of oil and commodities. But they are having the meeting on Saturday, and a lot of people reported today that there were signs that the deal would go through, and this would definitely help bring the price of oil down. So there was that. And then finally, for a company here, Rivian, they admitted a mistake on their price hikes and decided to roll them back after announcing them yesterday. So pretty interesting there. I guess not everybody's Elon, but we'll see. But very straightforward, and the thing that should be straightforward right now, commodities are in control. They are important. It hasn't been like this in 30 years, and they have the ability to move a lot of stuff. So just keep watching that, and we'll see if Powell could change anything. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks, and all of these are going to be for tomorrow. We'll go over them. They are related here to the commodities. They are all a little different, but I keep talking about this today. We've been going over it, but I am going to be looking to double dip. So it kept going up. I said I would double dip on the contracts, and really, I have the full strategy. So what I did, I made it free. We'll go over it, but then on top of that, we were up so much, and I had the good leverage. We were seeing a move. I said, okay, I think we can make this a really good win-win with all the volatility, and since I am expecting a lot of movement with time, I think we could build a pretty good position. I went for some of the puts on the shorter term, or at least shorter than the ones that I got on the call side, and now my idea is ride the wave, and then once they go back below 1K on the futures, that's pretty much like $10 on wheat, I'm going to be looking to buy back in, and like I talked about, I'm probably going to go with the futures. So as far as the play, before I do it, look at this. The future trade went up another 18 grand. That means it's pretty much halted, limit up again already, and that is right now as we're doing this watch list. That means by tomorrow morning, wheat is going to already be at a limit up the 4th day in a row. It's going to be at 1200 now. So essentially, if this went up to like 1170, now the value is going to be at 1240 again. We were talking about the net asset value. This is a fund, and it is balanced with the contracts that we want. That's why this play was so killer. Again, if you've been watching the watch list, you know what I'm talking about. Or again, if you're coming on stream, we are talking about this a lot. But as far as what I did with the plays, I grabbed these a couple days ago, literally on Monday. We grabbed 100 contracts for $2,000, $20 a pop. And then this morning, I wanted to hold some, but I was even seeing with a lot of plays, you guys have noticed it, we added a little liquidity and then they start to run a little bit. So I took some, made it for free, and this was already around like 400 or 500%. So I got my initial investment back. Remember, I spent $2,000 for all 100 contracts, got my $2,800 back, so $850 net. Paid for the trade, and then I have about $10,800 left. So if I held it, I think at one point they did go up 1,000%. It would have been $2 grand into 20,000, but like we said, we are holding, and now this is for October. And now this is where it gets good, because it was already up a little bit, and I did overpay for these, but I said, all right, well, since we have those with October, you hear me explaining the plan, I think there's going to get a lot of up and down. I said, well, let me get some puts, and I bought 50 of the Aprils, not the March purchase, so this still gives us about like 45 days or so. I got the $7 puts just right above where it started. If we get any sort of big dip, if there's anything from ceasefire to, I don't know, they magically get a good harvest, then we could profit both ways. And even on top of that, if there is any volatility and puts and calls both go up, then we're going to have a double win-win right there. So this is the play that I have so far. This is what I plan to be holding. Again, we are going to be riding this out and watching it. And really the question you got to ask yourself is just look at the price of the futures. Essentially, wheat should trade near it, give or take maybe like a 4 or 5% premium. That's what we've been seeing. Again, it's like $1.50 difference. So every time you get a limit up halt, we've seen wheat go up anywhere from like $1.25 to $1.50. So that's what I'm looking at. That's the first play. We are going to be riding it out, and it should be pretty golden. So we will see what happens from there. But that is the first one. The second one, I decided to go with this play, ACH, and it is risky. And I'm saying this is a second string play. Again, I said play of the month. We're really liking it. Again, it just made sense. Not only were the premiums cheap at the time, but literally on the watch list videos, we were talking about the wheat production and how much of it is made, Russia, Ukraine, all the impacts. So that's the reasoning why. But now, like we're saying, it applies to a lot of things. And the next thing to go, we were talking about it today, the next thing that's kind of in a danger zone, it's related to the whole region there with Russia and all of that, but then also ties into China and now their influence in this, but it's going to be aluminum. But now there's no aluminum futures. It was hard to get exposure. Alcoa is an aluminum play, and we already got some of that, and we already got to play that. There's also like Century aluminum, but there was one that I found lagging. It was ACH. It was very illiquid, but ACH is the biggest China state-owned aluminum creator provider, and it also has some of the coal exposure too. So I grabbed this to get some aluminum exposure just in case. Again, living through a commodity moment like this, anything could happen, but it's about finding the right ones. If anything, I think wheat is the primary one to be looking at. Everything else, it might do its thing, but the one with wheat, that's where it's very unique, because again, if you look at the supply demand of wheat, you could really just see the pressure, because it shouldn't be like that. So that's why I bought the play. And now as far as the play, I decided to go with 25 of the May 22 calls. I bought them at like 90, 95 cents. The chain was absolute garbage all across the board, and this thing is very illiquid. Again, you can see the breaks in it, so I thought it would be decent. We'll see. Again, I like the non-crowded trades just like wheat. Nobody is trading any of these, and nobody's looking at these, so I think it could give us a little bit of an advantage. And tying China into it, I do think China may kind of end up as a winner. Remember, we talked about how when one area kind of dries up, it opens up the opportunities for other people to win, so I think this one will be a little bit interesting, but watch out for them. This play, I'm not as confident as the wheat, so shout out to wheat, baby, but watch out for that. That's the second one. And then finally, KGC. This one's another interesting one. It is gold related, and this came up on that option scanner. So if you remember, we did the same thing a couple days ago with PLL, and if you notice, this thing is going up, and it's going up good. I've been looking at this option criteria. I'm trying to find plays that are just very, very dead that people aren't looking at, very minimal open interest, and then I'm looking for certain big orders, and I have to filter through, and that's where I'm finding some of these. So we found that Snapchat, we found this one right here, and that's why I'm like, okay, I saw one come up today, and it was KGC, but just like Piedmont, I was like, well, it relates to a commodity. Again, lithium is a commodity right there. I was thinking, all right, well, this is a gold play, might as well, let's go for it. So I just grabbed 200 shares at like $5, $5.20, thought to get some exposure, and then we'll see what happens next, okay? But those are the main plays. As far as everything else, it looks like futures are dropping right now, and a lot of commodity plays are going. But besides that, I did make two other plays today. We flipped out of a Costco for pre-earnings. It was a very small one. I was looking for the pre-earnings run-up. We grabbed them in the morning. It was like the next week, 625s, I believe. So pretty far out of the money. I grabbed them in the morning at like 25 cents. They had the earnings premium. They held up. I sold out at like 35 cents. They were going for around like 40 there towards the close. Got a small profit. Thought that one was decent. And then I grabbed some of the Krogers right here and grabbed one of the next week 59 calls. And I got like 4 of these at like 13 cents. I sold out 2 of them at like 23 or 26 cents, got 100%. The rest kept going crazy, so I'm still holding on to those 2. And then I also grabbed these at 8 cents. I could have got a lot, but I think I sold them out around like 20 or 15 cents. So we did both of those. That was a nice play. I got 2 contracts for free, and then the rest of the day was just riding the rest of the waves here. But as far as everything else, watch Wheat, watch Kroger, watch RTX. Again, they came down, but the premiums that we got, they're still up. So just get ready for the cycles and waves and how they're going to play. Again, KGC, that is the gold one that we talked about, ACH. Then watch Piedmont. Again, this one's lithium. It's related to Tesla too, but they're going up. That option is up like 30 or 40%. Another one here, UNH, they stood out because they're up. Remember that little end of the day trade? That thing's holding up, but the fact they held up on a day like today, definitely keep your eye out for that. Boeing, the premiums didn't go away, and those premiums are still up, and I think Boeing is getting to that risk mode. Again, if they break down, you could kind of see if they fall through here, it could kind of start looking like Baba a little bit. So watch out for them. Watch XOM. They came up today. Contracts are all over the place. I expect the same thing for tomorrow, so watch out for that. And then Costco, post earnings, they didn't do too hot, but we're going to see the premium. I know maybe it does offer a long-term opportunity, but they had a lot of steam. I don't think it's going to be a make it or break it earnings, but we will find out tomorrow. Then as far as everything else, man, TLT, I mean, we're just going to really want to wait to see what happens with commodities. Again, it's holding this range, and it's probably going to do that until we get the next break, or at the very least, if commodities go crazy, you will watch the yields go higher. They will have to play along eventually, or that may very well be the snitch signal that'll tell us what's really going on. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shot. I need your rubber. Show some love, baby. God bless you. But the cult loves you. I love you. I'm gonna see you in the morning. Let's go.